All right, hey there. Good afternoon. Well, good morning, everybody. It is just a few minutes after 11 a.m. Central Standard Time here on Friday, the 19th of August, 2022. Coming at you live from a quite sunny Bernie, Texas. I'm Chris Franks with Texas West Capital. Hopefully, you guys are doing all right. Oh man. So we had a good drop overnight with Bitcoin, right? And as I put in the title there, capitulation, or are we just beginning the move down? And so we'll talk about that. The dollar itself, has it, it's extended its rally, but, it looks just like a wave too. And at this point, things are pretty overextended as far as indicators go. So, is it possible the dollar is done with its rally locally here? And so if it is, again, that takes any kind of pressure that you might think that it has on Bitcoin and stocks and whatever takes it off. So what happens with stocks then? Our stocks topped out. Bed Bath & Beyond had a great, just stupid rally up, right? And then it just got destroyed, just sent right back down, right? I think that lends a lot of support to the idea that maybe stocks topped out, back at the beginning of this year, end of last year. So we'll see. We still got steps to do, but we've had some gaps down over the last few days as we kind of reach the top. The question is it just like a wave 3 and we've got a 4 and a 5? Again, guys, my thought is that, it seems best maybe, as far as it plays out that the stock market is done when you're looking at the counts, but there is some room. There is some room for potentially maybe this is wave 1 of 5. Which kind of crazy, right? Same thing with Bitcoin, right? I've talked to you guys about maybe, because we can get 5 waves up from that December 2018 low, right? That bear market low there. We can get 5 waves up. So what if, as I floated you the idea before, what if that was one of wave 5? What if we've still got, 2, 3, 4, 5? And so, this is one of those times where, I would definitely love to be, wrong. Saying that the top of the stock market's in or whatever, because I'll tell you what, if it's not, we've got this last kind of push up, and you've got that time to make your money, and then holy crud, what's coming, right? But with it being, that this end of the end of this super cycle, we can expect a lot of money still flowing into it. We can expect probably an overextended 5th wave, continuing to push up there. And so that makes for some really easy long money, right? So these are some things we're kind of watching at right now. We're kind of like at this area. So we'll take a look at that today and continue on with that. Man, oh man. IRS, we've talked about the IRS. They've got this, with that new bill that was put, what was that called? The Inflation Reduction Act. It's the dumbest name. But, guys, again, bills that get passed in Congress, they give it names to make you feel like they're doing something for you. And so I don't believe that it's going to reduce any inflation or anything like that. But there's that provision in there that, again, we've talked about the IRS. The IRS has been sorely underfunded. Not that I have a big issue with that, for years now. And, they've really been working with this really small staff compared to what they've been tasked to do. And so, this bill passage gives them the ability to hire, 70,000 new agents. Well, the one thing we have to remember with that, guys, is that they're expecting about 50,000 retirements at minimum over the next 5 years. So really, you're looking to fill those positions, right? And maybe add a little bit more, so get the IRS, with enough people to where it's not as overburdened as it is, right? As the people are. Now, the thing about that is, I don't believe for a second that if you're making under 400,000, all of a sudden you're not going to have an increased chance of IRS scrutiny. It's par for the course, guys. It is what it is. But it's not like they're just adding 70,000 new agents on top of everybody they already have, which, even if they were, again, they are very underfunded. They've been cutting staff for years now because their funding's been cut. So, I'm definitely not a fan of the IRS. I'm not a fan of taxation. But, I pay my taxes because, the alternative for the government is going to prison, and I don't feel like going to prison. So, you kind of you bite the bullet and you do what you can. So, it is what it is. But yeah, so, this kind of put some perspective on that there. There's some other things, the other bills have been passed, again, we've kind of touched on a bit. They've got that semiconductor bill going through. You've got companies that, you've got companies that depend on these chips, right? And so when you had the pandemic hit, that chip shortage kicked in, right? Because, everything was shut down. And those chips are all from over on the other side of the water over there, right? And so I think what we end up seeing is more domestic. I think we might start seeing somebody like maybe, God, I don't know, maybe like Ford. Ford lost a lot of money for potential sales because they couldn't get the vehicles out because of the chips, during the pandemic here. And now they've got these, now they got this whole Ford Lightning thing coming out, which is their electric truck and all that. But I think you might see somebody like Ford or somebody kind of creating their own, domestic plant to create chips. Just because, you don't want to have to rely on somebody else. So if you guys are old like me, you remember before the world was really, this globalization thing was really there, right? And so in my lifetime, I've seen this move toward globalization, right? Where, the areas that can do certain things for the least amount of money generally kind of get it done there, right? And so you have all this world trade going on, and then you had the internet, and you have all this other stuff. I think, after the pandemic here, we go, oh, whoa, look at this. All of a sudden, there's a big issue with this. And I think we maybe start to see some deglobalization going on. I think we start to see things maybe kind of turning the tide, pulling back more domestically, for what they can do anyway. So, yeah, there's a lot of stuff going on, guys. If you're paying attention, you are alive at a pretty crazy time. If you're as old as I am, if you're almost 50, you've lived through some stuff. I mean, you came out, you came out there at the end of here locally in the U.S. anyway, with the Vietnam War, and then we went into we were in the Cold War with Russia, well, USSR at the time, right? Then we saw the destruction of the Berlin Wall there. Mr. Gorbachev, tear down the wall, old Reagan back in the day, right? And then you see all this, and then we had, of course, we kind of go on to 9/11, and then we had all this nonsense over there in the Middle East for 20 years. And then in the globalizations continue to grow and grow and grow. We've seen China just, as they went more capitalist leaning, that you saw their economy just shoot up through the 80s into the 90s into the 2000s. And now, they're starting to do a lot of pullback on their own as well there. And, so you got all this stuff, all this cycling going on. And so if you're alive right now, which if you're watching this, I would assume are alive, right? There's a lot going on. There's really crazy stuff going on that you should really be paying attention to. A lot of stuff that is just really significant out there. And so now we get to where we are with the Fed. Again, we had the big employment numbers. And then it was followed by the surprise to the downside for the already expected drop in the CPI. They already had a pretty good expected drop, right? But we came in lower than that. Fed gets together, and Fed all of a sudden goes, well, I don't know. Maybe we'll do 75 basis points this next time. Personally, again, guys, I've been talking since the beginning of the year that we'd probably get the peak of all these interest rate hikes, whatever, be around the end of Q3, beginning of Q4. That's what we're coming up on, right? So we had a 75 basis point, and all this other stuff happening. And so, coming up next month, I think I think odds are 50 basis points. I think there's a possibility we could get 75. I don't think 100 basis points is really serious right now. But I think most likely we're probably getting 50. And I think, again, if those CPI numbers continue to drop, I think that's pretty much it, right? And so what does that mean? Well, that means softening dollar, right? So we'll get that. Softening dollar means risk on, or I mean risk off. God dog it, risk on. I was right. Happening with the markets, right? And so then we go, okay, well, if we've got risk on in the markets, do the markets extend now? We'll take a look at the charts, but is what we just had at the peak here in November, January, depending which index you're looking at, is it maybe just wave 1 of 5 of the 5th wave? So maybe the rally lasts another few years, right? Man, the cost on that when it finishes would be huge. It's already going to be pretty huge, but maybe it does. Again, when we're looking at waves, when you get to something like the super cycle degree and whatnot, usually your 5th wave is going to overextend. There's going to be a lot of exuberance. You've got exuberance at multiple levels, right? So you've got them, at the cycle in the super cycle in the primary, and so you got all these 5th waves coming to termination at the same point, right? So I think there is an argument for maybe stocks to head up higher. But I tell you what, if it does happen, guys, don't just jump in stupidly. Be smart about your trading. Make your money, because when it's done, then it's done. That's it at that point, and it's hard. But I think again, you guys have been I've been telling you, I think the Bitcoin still got that higher high still coming, right? And I get a lot of, well, if stocks are going down, then how can Bitcoin go up? And we've talked about it, different ways, but maybe stocks don't go down. Maybe they continue to go up, per what I just said there. Something that I've been talking about lately. And there we go, right? And so you coming into the market now means, hey, there's your chance to make your wealth setting up there, right, into the last bit. It'd be easy longs along the way. You just have to, don't be stupid with it. Don't over leverage. Don't put yourself in bad situations. Look for your opportunities, right? So yeah, so we got all that kind of stuff going on. But we'll look at the charts in a minute. Who's here already? Let me see here. Bamboo, what's up, man? Nevlusian's here. Crypto Mowgli checking in. Blaze, what's up, man? Jonas checking in there as well. Deadly123. Who else we got here? We got Poison here. Oscar. Oscar says Bitcoin looks like wave D. As for Donzo, a Dunzo maybe heading into Q4. What's going on, Andrew? Good to see you too. Dancer Eddie checking in here. LXT, always good to see you guys. Brian Riley, what's up, my friend? Telluride here. Oh man, look at y'all here, man. Hank's here. He said had to marinate his tomahawk steak. How was life, man? If you're actually eating a tomahawk steak, life's good, right? Yeah, and I remember, maybe this makes me sound a little bougie here, but when the pandemic first began and everything flooded off the shelves here, I was looking for meat, and like tomahawk steaks were the only thing left, so I had to buy a few of those. They're kind of expensive. They're big pieces of meat, right? But man, oh man, love the cut myself. So enjoy that. Mark Chenard, what's up, man? You're about to go pick up lunch? Hey, man, you can't beat that, right? Let's see here. Poison says, talking about Bitcoin, says that drop under the daily pivot, the impulsive candle is not looking good. Maybe a test of the S1. Yeah. So generally, if I'm looking at this is the same thing I told you guys. If we're losing that, I gave you some interior levels to watch, but I said, generally, if you're dropping there below the especially decently impulsively below that daily pivot, you're looking for the S1 pivot, right? And so, yeah, potentially we'll take a look at that. Excuse me. Is it core of the IRA? Do you mean IRS? I don't know what you're talking about there, Hank. Let me see here. These times for sure. Telluride says his accountant tells him to just ignore the IRS letters because there's so many months behind. Laugh out loud. They are behind, guys. And so there's the kind of like the double-edged sword there. If you're due a refund or you have some issue with your taxes, with the IRS and everything, it means it's going to be longer before you get responses. And so that kind of sucks as well. It's just a really, man, the IRS is such a cruddy situation. Taxes and the way they're all done here. Oscar says, isn't real QT selling starting in September? What do you mean real? They've been selling already. They've been selling since June. Yeah, they've already been selling since June. Andrew says, rally till 2030, then the reset. Man, that would be awesome if we could get that for sure, right? That would be awesome. I'm not going to lie, guys. I would be a happy man. Let me see. What is that? That gives us, 8 years? So just over 7 years. That puts me my 50s. Nice time to retire, right? Hey, Bill, what's up, man? He says, Bitcoin plummeting, but inflation has hit 10% over there in the UK and isn't stopping. Interest rates increasing. Biblical floods yesterday here and 90 degrees in the same day. The world is going mad. It is going mad, right? See, Bill's old like me. he's experienced. So he knows what I'm talking about. I'm talking about all this crazy stuff we've seen in our lifetimes, right? He's a little bit more experienced than me. But man, oh man, it's been such a crazy lifetime so far. And right now we're kind of peeking out, I think, into all the craziness. Name Mr. Wilkes, what's going on? Good to see you. Scott Webb says, I'm here and need a beer. HJ, what's up, man? Good to see you guys. Let me see here. Oscar says that come September, the Fed will be cutting $95 billion a month from its holdings, split between $60 billion Treasury, $35 billion. They're already doing this. They've already been selling. They've been selling since June. Yeah. As a matter of fact, I brought up the charts on here one time back then. Yeah. I believe I did. So, but yeah, they've already been selling. So we would look at them no longer selling. We would look at them change. Again, guys, remember, the Fed does not make things happen. The Fed is always lagging. It's always catching up, right? So things happen and then the Fed acts and usually makes those things worse, right? They wait too long because they're always reactionary. They're never proactive. So yeah. Colton saying it doubles September 1st. Gotcha. Yeah, potentially. But again, even if it does, could see it changing around there because, again, the Fed's going to react to all this other stuff going on, right? And they're going to do QT until all of a sudden it looks like they can't. Well, to themselves anyway, right? So yeah. Okay, Oscar, that's what I was getting there. Oh, that's why you called it real, because it was 2 times? Yeah, everybody remember what happened in 2019 with Bitcoin there? Sure. Yeah, so we'll see. We'll see what happens here with it all. Again, that CPI cut was pretty strong. So if heaven forbid we see another one like that for the Fed, I think if we saw something significantly similar like that coming out next month, I think the Fed would really be putting on the brakes on a lot of the stuff they're doing, because at that point they're showing hard stop, hard turn for CPI there. So and that's just part of the picture, but that's a one significant part of it. So I think that would definitely give them cause to pause and then see what's going on here, right? So we'll see, guys. We'll see. All right, yeah. So anyway, you can join us here, guys. HowToTradeToWin.com. We'd love to have you there. We've still got the special going on right now. Again, not sure how much longer we're going to do that, but you can get Tier 3 for a year for half off, and I'll give you 6 months of signals, your choice, crypto, stocks, or Forex in there. And man, oh man, there you go, right? Let's kind of get over here. Let's look right here. Let me kind of catch up with. I see something here. What was a comment here? Did I miss something here? Oh, Hank was saying Inflation Reduction Act was the IRA. I got you, man. Yeah, okay. You said IRA, and I'm thinking Europe, and so I'm thinking, over there in Ireland, right? Do I think the support of NAFTA was an incorrect assumption about what would happen with America's manufacturing base, or pure greed? Man, it's just... there's always going to be that. People are going to vote for things that give them ease, right? Remember, the most basic way to look at life and people and whatnot is that we do 2 things. We try to get away from pain, and we try to get toward comfort, right? And of those things, getting away from pain is the strongest thing that we do, right? And so, I don't know, is heading toward NAFTA an incorrect assumption about what would happen in America's manufacturing base? No, I think, again, it was this whole idea we're moving toward globalization, right? I mean, that was the big thing. If you grew up in the 70s and 80s or whatever, that was the whole thing. Let's globalize. Let's outsource these things that are more expensive to do at home, concentrate on the things that we can do well and inexpensively, and then get the other things that would cost us a lot more here. We can get them done somewhere else inexpensively, and hey, the whole world's better off, right? Well, it is, until all of a sudden supply chains are disrupted and whatnot, and all of a sudden everything's at a standstill. Then you get inflation from, which is from that demand, right? You get, I say inflation, but really it's just a rise in prices. And then you have the government's sending money out, and saying, oh, you don't have to pay these certain kind of loans and things for now. Remember, we had the mortgage moratorium, we had the student loan moratorium. Then we had all the, unemployment bonuses and whatever going out, bonuses, just the extra money and everything going out. And so, all that kind of comes together and creates this effect. And then we're at this, oh my God, prices are rising. Holy crud. And then you got every yin yang on FinTwit and crypto Twitter who think that, the inflation that we're seeing, which is just the rise in prices they're calling inflation, right? They think that that's hyperinflation. And it took me a while to figure this. I couldn't figure out why everybody kept going, basically saying I'm an idiot about hyperinflation when the number of dollars are getting shrunk, right? They're getting pulled back. And then it finally hit me as somebody else made a little bit deeper comment about it. All these yin-yangs here on crypto Twitter and FinTwit think that hyperinflation is that CPI. That's what they think. This is the problem. People don't know what they're talking about online, but they talk about it like, man, oh man. Like there ain't nothing different going on. Like they know it all. It's just silliness. Don't do that, guys. Oh my gosh. It makes you look so dumb. Anyway. It finally hit me one time, because I kept getting the same comments. I'm like, why are people talking about this inflation like it's happening when the actual number of dollars, because the Fed's selling all that out there, sucking those dollars back up? Why are they talking about hyperinflation? And it's because they were talking about rising prices is what they were talking about. Jeez, oh whiz. Anyway, so yeah. Kimozabi says, I actually heard the Fed isn't selling as much as stated and actually bought mortgage-backed securities in July, according to what website? But didn't verify for myself. I'll have to check on that again. I know that back in June and into July, that first month from when they started selling, they were selling exactly what they said they were selling. So I'll have to go back and check. But yeah, I mean, they have no reason not to be selling it. With their views on inflation and raising interest rates and everything, there's no reason why they shouldn't be selling. It's all, it all works together, right? So yeah. Monetary inflation is the only kind of inflation. Inflation is creating more of a thing. You can't create more prices. You create a higher price or a lower price. I hate these dang econometric government explanations because they muddle the waters and then people don't know what they're talking about. They come in and they get confused. The only real inflation is monetary inflation. It's the growth of the money supply. It's inflating or it's deflating. Less, it's going out. Prices don't inflate or deflate. They rise and fall. I'm telling you, man, language, we get lazy with language. But in government, you manipulate language to say what you need it to say, right? But anyway, let me see here. Let's see. Yeah, your balloons, you're inflating them. More air in them. Oh my God, it's not a difficult concept. All right, so let's jump over here to Bitcoin. We'll stop talking about that. Let me see here. So what we got here. So again, watching this this large pitchfork here coming off here, right? As you can see, of course, we stayed basically on the top side of it. We dip below to this time right here, rally back up, support, resistance, support, breakout, support, resistance, support right here, breakout, and then we're pulling back here. Okay, so here we go. So from that thing, it doesn't look bad, right? It's still all right. Let me see here. And so, okay, so we look at this and we go, okay, well, maybe this is ABC, right? If this is a 1, 2, 1, 2 here, so 1, 2, 1, right? It's possible this could be an ABC. This is what we've talked about, since the beginning. Always the possibility. But nothing's happened yet that confirms that this is an ABC yet. If we think this is an ABC, it has to drop below what we believe it would be the B here, right? So we would go A, flat is B, and then diagonal here for C. Okay? So we need to drop down below this swing low right here at 18,892 here on Coinbase to say, okay, that's probably an ABC. Until then, quite possibly a 1, 2, 1, and then 2 working here. Now, Again, always big picture. Even if you're trading larger or smaller time frames, always keep your big picture in mind. So impulsive breakdown below the pivot, right? Right now, we're just hitting all this support right here. We've got the high volume node right here at around that 61.8 to 65%, right? That's about where we hit. Now, this is 61.8 of this diagonal here, right? Solid wave 2, golden pocket, right? Bottomed out and oversold with the daily Stochh RSI. RSI almost into oversold. If we continue down toward that S1 pivot, we're right there around. I don't know that we maybe hit the S1 pivot. I think if we were to continue down, we might kind of hit this tine here, this area around the 78.6 at 2000, all right, 20,134.70, right around that area. I think would probably be where we'd hit. So what am I looking for here? Big picture is I'm looking for another breakout and close above the pivot. If I can get that, I'm feeling good that the bottom's probably in. And then we want to see a breakout. Yeah, I mean, you could look at your what you call it here, retracements. And so, basically you can look at the 23.6 there at 23,676.5. And if you can get above that, that should have you looking higher, right? So here's the cool thing about this. Let me jump back here. Well, you know what? Let me talk about that in a minute. So yeah, either A, B, C or 1, 2, 1, 2 here, okay? Again, if we drop down below this swing low here at 18,892, then I'd be looking lower. If that's the case, then basic extensions get us a wave 5, because the idea would be this would be 3, this would be 4, and this would be 5, right here around 14,100. Okay? Now, if this does happen, it doesn't have to get there. Okay? This is just normal extensions, what we would expect, right? That's all it is. 14,080, whatever. 14,100, yeah. All we need is 5 waves down that break down below the swing low. If this is 3 and this is 4, then all we need is 5 waves down that break down below wave 3. So, really, anywhere in here, wave 5 could end. But generally, we'd look for the target down there, okay? Now, if we jump out here to the weekly, let's talk about something here. Okay, that is one ugly weekly candle, ain't that? But guess what? It isn't the end-all, be-all. Because there are other times where and by the way, this is still Friday, not even halfway through Friday, or maybe about halfway through the Friday day. We've got another couple of days left. So if locally, it looks pretty overextended locally, so rallying back up, we could end up having some sort of doji or at least some long wick potentially down here by the time it closes. But nonetheless, if it were to close something like this, right? Look at this right here. This big bearish engulfing takes it down to the support area and then back up, right? Big bearish engulfing takes it down to the support area, then back up, right? We can look at some other things here. We can note, like this right here, you got this resistance from here, right? And we can look right here. Let me see, is it this one? Yeah. So right about here is where we broke into overbought, right? And our RSI was right at this level, right? Let me go kind of make this point here. You all might be seeing what I'm talking about here. Look at right here. Let's get that there. Okay. So this point over here where we broke out here, it pushed up and came back down, right? So in this case, it wasn't bearish engulf or whatever, it was just a large upper wick. That looks like it should reverse, right? But instead, it continued to break out and then popped out higher, right? We've got potentially the same type of idea here, right? So in this case, it rallies up, pulls back to the previous area of support, and then goes up, right? Here we are. We go here, pull back to previous area of support, potentially go up, right? We are at the same basic level here. That resistance prior to that breakout and head higher here, around that 40 area on the weekly RSI, right? Stochh RSI, we just broke out into overbought. We just broke out and overbought there. And then look, it stayed overbought the entire rally up here, guys. So basically from 3,700 to 13,800 or so up there. It stayed overbought. So don't think just because we're hitting overbought that, oh my gosh, it has to come right back down. At this bottom here, that denoted the start of that bullish rally all the way up, right? And we were at that same point on RSI there. So a lot to be said about that, right? You know, and of course, you know, you have your capitulative volume and then capitulative volume again, leading into the drop to the low there, right? Did the same thing here, capitulative volume coming in there, right? And then was up, right? So, I mean, there's a lot of similarities between that 2018 low and this point right here, right? So, again, I put forth the question, what if this is one of five, right? So, what if this is 5 waves up and it's one of 5? And so, at this point, we're, you know, we almost pulled the 50% retracement. That's a solid wave too. And so right now, our pullback right now is just at around the 38.2 retracement of this potential 5 waves up, right? 1, 2, 3, 4, 5, maybe. Remember, we showed a couple different ways we could count this. This could be 5, right? And so, you know, again, just because of what's happened there, I guess what I'm trying to say is, you know, jumping immediately bearish to, oh my gosh, we got to get to these new lows. That's the problem. That emotional response is the problem that causes most traders to lose all that money that they've been losing, right? It's not being logical. It's not taking a breath. It's just immediately jumping from one to the other, right? Again, here is this this monthly, right? So right now on the monthly, we've got lower lows here, right? On the RSI there. Yeah, I'm going to take this off these other ones here real quick. And so what does that mean? Well, geez, oh whiz. I should just hit my template there, but I didn't. Okay. So we got lower lows there. This is the 2018 low. This is the current low, right? So these are our two swing lows. We clearly have much higher lows, right? Now, that doesn't mean this can't fall further, because this, until this breaks down below this swing low over here, right? Over here at about 31.28. Until we break down below there, that's going to be hidden bullish divergence, continuation of the trend, right? So we could still end up further, but man, oh man. You know, right now we still have that hidden bullish divergence potentially playing out there, right? So, you know, again, just kind of looking at things here, we do want to see a breakout above this weekly and monthly, you know, S1 pivot here. We want to see a nice impulsive breakout. We want to see price remain above it. That's our big picture, right? So that's kind of what we're looking there. Let me see here. Prices don't inflate. I'm going to tell you again, as somebody who has an economics education, you know, my proper schooling, my you know, university education, you know, prices don't inflate. They rise and they fall. The money supply inflates and deflates. But the term inflation has been hijacked by government so that it could manipulate. You know, again, it's all about manipulating the language to say the things that it wants to say. But again, I'm not going to worry about that anymore. Scott Webb says, if OBV is showing a divergence but RSI isn't, or vice versa, do you give one more importance than the other? Well, let's pull up OBV here. What time frame are you looking at? What time frame are you looking at here? This would suggest, if we're looking at the daily here, we do have OBV selling off as prices going up, which generally would suggest that price should come down lower, right? Let's see here. Show it to the monthly there. There we go. Out there at that monthly, right? So monthly, of course, in line with what's going on here. So no divergence on that. You don't have an example already, just previous experience. Yeah, so you have to be careful with OBV and advanced decline. They're both a different way of measuring supposedly what smart money's doing. But the thing to remember is on major turns, on major reversals, Smart money, everybody is often in the wrong direction. Smart money, big money, whatever, everybody. This is something I've kind of talked about over the last couple of years, is that, on the smaller changes and whatever, usually your smart money is going to outdo you, right? But when you get to the major reversals and changes, often your smart money is in the same way as pretty much everybody is wrong is everybody going in the wrong direction? So, I've learned that when I'm looking at some sort of way of trying to understand, like I said, OBV or advanced decline or whatever, and trying to figure out what may be going on, I often make sure to know, well, is it a major reversal point or not, right? And then I kind of zoom out to a little bit larger time frame there and kind of work with that. Here on the weekly, again, the weekly shows this rally up here, same as what we have here, same as what it is. What was I going to do here? I was going to show you. Oh man, I forgot. I just had something in my head I wanted to show you guys. I'll probably get it here in a minute. I won't sit here and worry about it, but as soon as I can remember it, I'll bring it back there. But yeah, right here, again, you want to look in this area right here, right? So yeah, you've got some selling going down there in this recent area here. Off that low, you had a rally up to that, the top there. Started kind of selling there, leading it down, right? So we'll see if we can get that reversal off there. But often, again, most often, when you get to your major kind of lows and highs, usually the market, everybody, even your big players, everybody is, for the most part, is usually offsides. They're usually in the wrong direction. It's just at that point where everybody's kind of given in to whatever the current trend is, and that's when we usually see it kind of doing its reversal thing. So yeah, you got to be kind of a little bit careful on that when you're using it, especially on the major reverses. Let's see what the advanced decline line says. See, advanced decline line completely different, right? Look at that right there. You see how it diverges? And so that's the other thing. And again, your advanced decline line, your OBV, will often, believe it or not, diverge because of the way in which the data that they're collecting and manipulating is, right? The way that they're trying to look through it, the way in which they pull that data. So it's not really an easy indicator either way to really kind of understand what may or may not be going on there. Again, clearly different here on the daily, right? If we jump out there to the weekly, look at this weekly here. So you can see that they both kind of bottomed at the swing low there, right? But you can see a much greater kind of rally going on here with the advanced decline than you do here with the OBV, right? And then what just happened there? Why did it dump off? Oh, it must not have been enough data for the advanced decline. Oh, wait, no, it doesn't. Just there we go. Yeah, it's more flattened because of the data. But look at the difference here. Advanced decline hits its high over here in September 19, which was just after that swing high off that bear market low, right? And then it's got complete selling off the entire way, whereas we got this going up here. So you have to be iffy if you're using these type of things and really kind of understanding what you're looking at and where, and and the larger the time frame, if it doesn't have enough time going back to really kind of get its data, it's going to be skewed as well. So yeah, I would use it not necessarily as something that says this is definitely what I should be watching, but you can use it maybe something to look along with other things you're looking at. But you do have to kind of keep that in mind, all right? When we have this impulsive dump, can we confirm that rising wedge? Which rising wedge? See, if I look at this is not a rising wedge. This is a base, and this is a wedge. And so this right here would confirm this as a wedge. Yes, this drop off here. Yeah. But, again, the wedge doesn't come all the way back here. This is a bunch of sideways, and then it leads into a wedge. You see what I'm saying? Which is why, again, this could be A, B, and C, but we won't know that for sure until we drop down below wave 2 here. Yeah. So, again, we continue to play it and watch as it goes here. As far as the daily goes, we do have this area here. You see you've got this, what was a demand block here? And then you've got this demand structure in the wick here in that same area. It's right here at the high volume node. It's right here at the, what is this? That's 61.8 kind of area at the top there. And that's pretty much where we're kind of getting a bump from right there, right? So if we continue to pull all that back, you see how that works right there is that support resistance kind of area. So, I mean, if we can see a rally, I mean, even if it drops into this area, if we can see a rally up out here that carries above that daily pivot, I think we're looking at a good chance that this count is probably playing out. This 1, 2, 1, 2. And if it is, let's say it's done there at the bottom, right? So this would give us a wave 3 up here at around 31,471, right? Where does that get us? That gets us right up here to the top, right? So that's just 3 right there. So you get kind of this idea that you're maybe running with this like a 3 and a 4, and then you get your 5 up here. And this is without overextension. So you get your 3 up here, right? And again, probably, I think it'd probably be a short 4. I think it's the 23.6, not the 38.2. And then that would, of course, lead to this 5. And I'll tell you why here in a minute. Up here, potentially up here at around 37,000 at least, right? So what do we have at this point? Well, now we got 5 rallying into this previous resistance area, right into this high volume node. But in this case, we have 3, 4, 5, right? So it breaks out through this, pulls back through it, breaks out through it again, and then comes back and tests it here. And then we rally up into that next area. And so I think at that time, once we're breaking out impulsively here above this kind of resistance here, 33,000 area, if we get that, I think that says, okay, bottom's in, we're headed up higher. But I do think we probably end up getting some sort of overextension here. I think we probably get some sort of overextension and potentially leading, instead of a wave 3 here, a wave 3 up here. Secondary target up there around 33,870, right? So then what we get is we get this circle 3 up here, and then we get 4 back down there, right? Again, in a short 4, but now you're pulling back into this high volume node. And then that gets you a 5 up here around this upper tine, which is 3. 4 comes back. Again, retest this as support. 5 breaks out. Probably up there. And so I think we would be much, if we're going to do this, I think we'd be much more likely to hit this kind of area doing that. Okay? So I think that's what we'd be looking for. But again, we need to now make it back above that daily pivot. So where are we locally? Well, I've got this here as an AB, and then I've got this as just a long 5 here, basically. So it's 1, 2, 3, 4 is a triangle. And then we've got 1, 2, 3, 4, and then finishing with potentially 5 done here. Potentially 1, 2, 3, 4, 5. Right around that 61.8. So we're going to look for, again, the first thing we're going to look for is a breakout above this circle wave 4 here, which is actually at 22,152 and 4 cents. But it's right there around the daily pivot. So I would say a breakout above the daily pivot. That's gonna signal that, hey, wave 2 is probably complete, but we want to see a breakout then above the descending channel resistance here. The wave 4 triangle resistance at 23,449, and then follow that through with the wave parentheses B up here at 24,448.5. Those are the targets I'm watching as we're going up. That's what I want to see. You can see that we're well oversold here on the 1 hour. Well oversold here on 4 hour, just now crossing bullishly on Stochastic RSI, right? Take a look at this volume. Look at this volume here. Look at these last 3 bars before the current one. Spike of volume, large candle spread. Larger volume, much smaller candle spread, right? So this one is $856.50. This one's only $442, right? So basically half the size of this one on quite a bit more volume. And then the next one down here at the low, this doji, almost as much volume as the previous one, and now we got a doji which has $27.65. More effort, less result. We should at least get a bounce. But again, with it being so overdrawn on so many different time frames up through that daily, I think there's a good chance it's probably a bottom there. If we zoom out here to the daily, again, the daily, we're just not into into overbought here on the RSI, but Stochc RSI, of course, bottoming out there and overbought or oversold. Sorry. Which again, this suggests that maybe we could have it further down here, right? One more push down, maybe finish that fifth wave down a little bit more to get this into oversold, but we don't have to, right? So we had it oversold here. Oh, by the way, that was another thing here, guys. On the weekly, on this chart over here, let me show you something. The last time we were overbought on the weekly was that 2018 bear low. That was the last time we were overbought. We neared it here on this flash crash here in 2020, right? March of 2020. And then we were up a little bit more here, kind of about the same level here. But this is the first time we've actually broken down into the weekly oversold in RSI. You know, we did it here at the at this June swing low, right? Last time we did it was the bear market 2018 swing low. So again, you know, when you're comparing everything that's kind of happening here with what happened here, we've got a lot of setup significant same way, right? Remember over here, everybody's screaming it had to go down below 1,000, below 100, below $25. I think I saw 13 cents or something at one point. And right here, everybody's swearing down, you know, that has to go down. Now, again, it could still go down, but, you know, it has to break down. It has to break down further. From where it's at here, if you're just saying, oh, it's definitely going to go down lower here from where you're at, you're guessing. And maybe you'll guess right, sure, maybe. But if you base your trading on guessing, you're not going to have an account. It's going to whittle up, you know, and dry up and just kind of float away, right? Can't think of my words today. So you got to be logical about it. So again, you know, for me, the confirmation comes on the breakdown below wave 2. So yeah. Let me see here. Poison says he thinks that this is a big wave 1 finish and now wave 2 near the S1 pivot and then up to 30, but we will see. We also have hidden bullish divergence on the 1 hour RSI. Okay, all right. Hank says this is also the first time crypto has to deal with a recession, making it possible this time is actually different. Don't think so, but the argument is solid. I don't know how solid you think the argument may be. That's something I've talked about for years now, right? Is the fact that Bitcoin is only known a secular bull market, right? And we don't actually know how it's going to react in a recession, right? Like a proper recession, depression kind of thing. But that we would, you know, normally say, okay, well, it's most likely a risk-on asset and recessions are risk-off, so we should expect it to do what we would normally expect risk-on assets to do during recessions, right? But again, then we have to look at what if, even with the stock market, what if it's wave 1 of 5? And so we're going to look at that here in just a minute, okay? But here we go. Anyway, so yeah, as we look at this, a lot of volume here, you know, we want to see, do we get that push up? Here's the thing. If we get this rally and breakout back here, even if it breaks out above the swing high here, your people who have been very bearish saying it's going down to new lows are still not going to accept that this may be the low here. They're going to give you some higher targets now and say, oh, but it's definitely got to come down lower. And that's the way people in general tend to think, right? We're very emotional, right? We tend to stick by whatever it is we think. Yes, I think a certain way, I think a certain thing, but again, for me, if we're dropping below this wave 2, I don't see any reason why this is anything other than an ABC. So it doesn't matter that I think that that's what's going to happen. You know, if we drop below that, then I'm preparing for further downside. But until then, there's too many other possibilities coming in here to suggest that, that maybe we'll head up higher. So it's asinine for me to just go, okay, I'm going to short here to here, regardless of whatever happens in here. See what I'm saying? So yeah. But anyway, we'll see. we'll see what happens here. Let me see. So that's this. That's kind of what we're seeing right here. And you know, we're getting a pretty good movement here. Now let's go ahead and talk about the dollar, because again, you know, a lot of y'all want to look at the dollar as your, you know, what's going on potentially, right? Nope, that's the wrong chart. There we go. All right, so the dollar has hit that 78.6 retracement, right? This is the 4-hour chart. So 78.6, again, solid wave 2, right? And if we look at this, you know, again, potentially 1, 2, 3, 4, 5 here, right? 1, 2, 3, 4, 5. We may be printing a doji here in the 4-hour. We got about 2 hours left, right? Well overbought here on RSI. Stochc RSI topped out and overbought. Jump out to the daily, topped out and overbought. RSI nearing that, you know, that overbought area. Really, we ran up into this supply right here, right? So it makes sense to get kind of a pullback on that. Zooming back out here to the 1 hour. The 1 hour did print a doji, as you can see there, right? So a lot of a possibility going on with this. Again, the idea that maybe we've got a, you know, if this is a triangle here, A, B, C, D, E, then we may got 1, 2, maybe 1, 2, 3, 4, 5, right? So 1, 2, 3, 4, and then 1, 2, 3, 4, 5. You see? So we can potentially get that. So what are we looking for right now? Well, immediately we're looking for a breakdown below 107.841. That's going to hint that maybe wave 2 may be complete. But then we need to see price breaking down through this larger kind of hold here at 107.4. And then, you know what? We'll say the daily pivot here. I've got this down to swing low. We'll look at the triangle actually here at triangle support there at 106.505. Oops, change this right here real quick. All right. And so that's kind of where we look. But if you're breaking down through the daily pivot, that should signal, hey, we're headed down. Definitely a breakdown below, well, you know, I guess it'd be wave B over here, not wave 2, since I had to change that count up. Let's see here. 104.636. All right. So that's kind of how we would look at this coming down and what we would look for needing to do. But, you know, again, looking like DXY, the dollar may be topped out, or very, very nearly so. Let's see here. The 3-day, you know, we're down here in oversold, but, you know, well rallied up here, right? Weekly, you know, again, down here. I've got all this stuff. I'm looking at the wrong chart here. Well, we'll just look at this one, whatever. We did get the breakout. I mean, realistically, the breakout, we found support. We had some wicks down below it here on the weekly. This is that big channel. And then we're getting this nice, this is a nice weekly candle. I'll be honest, guys. It's a nice bullish engulfing candle. And so looking at this could suggest that we've still got wave 5, that we're still in progress with wave 5. Remember, we've been looking at confirmation of whether this is wave 3 or wave 5 here, right? So I'm not going to lie, this weekly candle is pretty significant, and we could see it breaking out and heading higher, in which case then we'd be looking up here at least toward this 114 kind of area at the EQ of this large supply structure up here, right? If this is 3, 4, and we've got a 5 coming in, then, I mean, this gives us generally a, you know, wave 5 target up here at about 112.316. So we'll see how this continues to play out. The weekly suggests that we may go higher, but, you know, it's finding resistance right here in that weekly supply, right? So if anything, we should at least probably pull back, at least, you know, maybe over the next few weeks. And then that would potentially get us where, I don't know, that R3 pivot's looking pretty good there. Yeah, see, that's the 50%. So I think even if we're going to go up higher, I think we've got a few weeks of pullback here to get us down toward this weekly R3 pivot right there at around 106.5 or so, a little bit below that. You know, if this is going to be 1 up, I think that's 2. And then we get 3, 4, 5 heading up there. And that may finish 3. So, you know, again, a couple of different options of what this top may be or what it could be leading into, right? So if we're looking at this, and this is going to be 1 up, then I would think that we've got to pull back down here toward 106.5, a little bit lower than that. At least, that's the 50%. Could potentially pull all the way back 61.8 here at 100, basically 106. And then we'd be looking at, and that should take a few weeks. That should take at least 2 weeks, maybe 3 weeks, depending. So if that's 2-3 weeks there, what happens to Bitcoin? Well, again, guys, looking at Bitcoin, with where we're at on that, right? On our weekly here, we've got room. We've still got room. And so a few weeks up could get us enough to potentially, because, Bitcoin, it tends to extend faster usually than the dollar, right? Than everything else. It tends to rally and drop faster, right? 2-3 weeks out, that could see us moving up in there. It could see us maybe finishing out 1, 2, and 3, right? And then as DXY starts going up, you get back on your 4, and then you get your 5 finish out, and then you have more pullback for going up. There's nothing that says price has to rally, straight up like this, all the way up here, right? Look at how long this took from the low to break out through this kind of 6,000 area here. This took what? This was, I'll do it this way. From that swing low until this breakout, that's this candle right here. That's 147 days. 21 days. 147 days, 21 bars, right? So if you were looking, comparisons, if you just look that, you're looking over here around the beginning of November, right? Maybe before it gets up here to this area. Maybe, the same kind of considerable level, right? Or even, prior to that. So what I'm saying, though, is it doesn't happen overnight. It takes a while, right? Because everybody's selling. Everybody's scared to go long, right? So it just kind of pushes up gradually. Hit it. So again, and definitely not saying that this has to happen, but what I'm giving you is something where everybody else is out there showing you all these things saying, oh, it has to go down, it has to go down. I'm saying maybe it doesn't have to. There is a lot of similarities between what's happening here and what happened over here. And again, if we take in the idea, which we're about to get to the stock market here, if we take in the idea that this is maybe 1, 2, like this is 3, this is 4, and then this is 1, 2 of 5. Hey, right? That leaves definitely that open possibility. And then you're talking probably, 600,000 or more for Bitcoin, right? So yeah, we'll see. Dancer Eddie, oh yeah, I guess that November is right around election time, isn't it? Speaking of which, if you're doing student loans here in the U.S., still don't know anything, right? So those are supposed to restart here in another week or so. And we're not hearing anything. Last thing we heard was the Biden administration was telling your student loan holders or whatever, agencies, what are they called? The agencies that are managing student loans, right? They're telling them to stop. They told them to stop sending out notices, right? That it was going to restart. Haven't heard anything else since. So everybody kind of pissed off at Biden right now because he's causing them more stress. It's like, let us know one way or the other so we can plan for it. So that's what we're kind of out there. So yeah, but does that work? I don't know. Again, I think there's a good argument to be made that it extends at least one more time. Through the end of the year to get through the midterm elections. Everybody's hating the Democrats right now, just in general, because of, again, they blame inflation, everything else on them, guys. These presidents, they really don't have any control over this stuff, Congress and all this stuff, guys. They're all reactionary. These things happen from, again, we talk about social movement, what's already going on, right? Whatever they do is in response to that. It's always reactionary. But, again, people want to blame, so they're going to blame. Not me. I hate them all. Trump, Biden, Obama, Bush, all of them. Oh man, it's just it's the whole idea of power and everything. But I digress. By the way, I said that just for those of you who think maybe I have some opinion, some liking either way to one of them, one party or the other. I don't even have liking toward the Libertarian Party. It's still a party. They're still going to say what they need to say to get elected and do what they need to. They're still going to use power, right? All right, guys. Anyway. So Let me see here. Deadly123 says, taxing the middle class to death is absolutely a bad thing from my perspective, especially during a time of apparent recession. But more relevant to me is how this all affects the markets. Yeah, exactly. Again, guys, wherever you are, just understand that politicians are going to tell you what they think you want to hear so that you vote for them. They rarely end up going through with what they say they're going to do. And when they do, there's often unintended consequences, right? And this is the one thing, most people don't have a very big understanding about is this whole idea of unintended consequences, which manifest themselves significantly in government, right? In the U.S. especially, it's pretty bad because the way our government's designed, it's like welcoming. It's like, what is it called? Man, I hate it when I lose my train of thought. It just takes off without me. What was I even talking about? Wow. Man. I better make my money now while I can still remember things. I'll come back to it if I remember. Let's jump on here to the stock indexes here, guys. Man, I'm having a heck of a day. I've got too much going in my mind that I want to try and remember to tell y'all, and so much that I end up not remembering to tell y'all. And oh man, every time I get done with one of these, even with my prompts and everything, I usually forget to talk about something that's usually something worth talking about. Oh man, yeah. So there's your 1 hour on your NASDAQ, right? So again, you had the gap down, you had the next gap down, right? Haven't quite hit oversold on RSI, getting there though. If we zoom out to the daily, this is kind of what we're looking at, right? Again, gap down, sideways, gap down again. But look at this daily. Look at this. Stochc RSI almost bottomed out. Now, again, that doesn't mean it can't fall further. Here we go right here, right? And look how far it continues to fall. It falls all this way while we're still over. Sorry, it pops out one time, comes back. So, I mean, could continue down. But nonetheless, we rallied 50%, right? We can get an ABC out of it. But that is a long extension there. So now we want to see, is this potentially 1, 2, 3, right? And so if it is, we would generally look for price to pull back. 38.2, that's 12,245.5 here on the NASDAQ composite, right? Right to that wave 4 area. 50% is the daily pivot. So again, you'd expect to get this pull back and go there. Now, if we're looking at pivots, what did we do? We moved in sideways between the pivot and the R1, rallied up into the R2. Usually this leads to a pullback that doesn't get to the pivot. So that 38.2 looks like a solid wave. So I'm going to look for 3 waves down to this 12,245. If we get that and it rallies back up again, all of a sudden this is looking a lot more like 1, 2, 3, 4, 5, which will give us A, we'll get B, we'll get 1, 2, 3 heading up. And like this, so this starts looking like the idea that we've got that this is 3, this is 4, and then maybe 1, 2, 3, 4, 5, right? Or let me see here. This is the chart. So I mean, if you're looking at this, you can go, okay, that same kind of I don't know. This looks like 3, 4 here. And so you get this move up. But nonetheless, the idea that we could be rallying up higher, right? Maybe it isn't. Maybe this isn't wave 1 of 5, right? Maybe this is just wave 3. This is wave 4, and then we've got wave 5. But nonetheless, it's still a higher high, right? So this is what I want to watch right now. You can notice here on the weekly, we hit the S1 pivot, same as Bitcoin, right? That's what we did. But right now, I want to see, that is a big extension up there. So I want to see, do we get that pullback just to this area? And you'll notice, look at this right here. This kind of, this 32.8 area, 38.2 area is almost the same kind of idea here. You had this swing high, this push up, pull back before it broke out, and you have this one here. So you got high, 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 all in the same area. So if we can get a rally back up off that, all of a sudden this looks like 5 headed up. And I'm looking for the idea that we've got 5 up, 3 back. And it doesn't mean that it can't just be an ABC, but that would be a really deep A, right? You would have wave A. Let me see here. If we pull back here, we'd get wave 5 up here at 21,407 at least, right? That's almost that 70.5 retracement. That's above the 65%. That's a pretty deep wave A. Now, it's not that it can't be, but again, we trade in what the likelihood of something being or isn't being, right? And in that case, maybe that starts looking a lot more like a 1. And so we look for a 2 on that pullback, and then we look for a 3 higher, 1,618. If we're getting that, then we're definitely looking much higher. And so again, if you're thinking doom and gloom for crypto, then you should feel a lot better because you're probably looking at correlations, which I'm not a big fan of, because correlations are correlations until they aren't anymore. Rarely do they last for any length of time. But like news, people tend to attribute them when it fits their narrative. So, we're human beings. We tend to do. So this is what we're looking at right now. I'm assuming maybe wave 2's done, but I'm looking for a rally up off this 38.2, 50% area. And if we get that and break out higher, then all of a sudden I'm looking at potentially 1, 2, 3, 4, 5. And I'm really looking a lot more like we're getting a new all-time high. Let me see here. What's going on? Is there a fundamental reason to see this kind of bullish count? What are you talking about, on Bitcoin? Yeah, just because of the pullback and just the wave count. But again, like I said, you drop back below wave 2, well then we're definitely looking at I'm looking. I can't say guarantee it's going to go lower, but I'm definitely looking at it going lower. For me, that invalidates the idea that it is a 1-2-1-2 when you drop through that wave 2 low. Until then, I'll just trade it down, and then if it bounces, I'll trade it up. And if we can get a breakout through up higher, we'll add more for our longer term holds on that. But yeah. Oh, on the NASDAQ for the bullish count? Yeah, so this right here is a bearish count. So this is my, it topped out here in November. Wave 1 down is a leading diagonal, wave 2 up. But right here, what I'm watching is the fact that this is so long. Generally, your wave C will be 100 to 123% of wave A, right? So usually it would be this right here. When you start getting to 1618 and 200, that's most often a wave 3. So again, if this ends up being a 1, 2, 3, then we should expect price to pull back to this cluster right here. That's the 38.2 to the 50%. Keeps it above the daily pivot. We break out higher. Again, if you're just trading pivots, something I talk about all the time on here, you're coming in sideways between the pivot and the R1. You hit the R1, you pull back, you break out toward the R2. Usually that indicates strong bullishness, and pullbacks will be limited. They won't go all the way down to the pivot. They'll come back like this kind of area. Again, it'd be this area here, the 38.2 at the top, the 50, the 50% at the bottom there, but probably that 38.2. And the 38.2 pullback from here, right, is where you expect wave 4 to be. So again, for me, my first thought is, okay, this third wave up, 1, 2, 3 here, that's a pretty significant extension. That's twice this right here. So it already has me paying attention to whether it's maybe a wave 3 or not, rather than a wave C. Wave C sometimes do overextend like that, but most of the time wave C is going to be around that. Usually it's the 123.6. But usually the 100 to 123.6% of that first wave A there. So when you start getting to the 1618, the 161.8% or the 200%, well then your thoughts should start turning toward a stronger possibility, a stronger likelihood that it's wave 3. So now you want to see how far does it pull back in what would be that third wave here. Does it pull back only 38.2 or 50% and then rally up toward that swing high? Because if it does, again, increases the odds quite a bit that this is actually a 1, 2, 3, 4. And then we get a 5, we get a 3-wave pullback, and then we'd start looking for the 1618 off that first 5 extension there. So yeah. That's my big thing. My big thing is this huge extension here, and then having traded pivots for as long as I have, the idea that we came in sideways between the pivot and the R1 and then continued to rally through the R1. So even if I'm not looking at wave counts, seeing this right here, I normally would expect a pullback to this area, usually here more than the pivot, and then a breakout higher. And if I can get that, then I'm thinking we're heading up here. Then that's just basic structure with pivots, how price action often works with pivots. Again, nothing happens 100% all the time, but much more times than not, that's what happens in this area. So yeah, so we have that, and then we can look at, so here's the thing. Pay attention to what we're seeing here, and let's look at, let's look at the E-minis here, right? Here we go. So again, look at the top here. Look what happens. We had this, it's not quite a doji, the body's too big, but similar to a doji, just with a bigger body there in the middle, bearish engulfing. Then a doji, bearish engulfing, right? So it seems like it wants to say, hey, we're topped out here, right? But again, Stochk RSI has fallen pretty fast here. So if we look at this once more, it's the idea that we've got this, ABC, right? But if it's an ABC, it's a pretty big extension. Again, 200%, right? So again, we look at the idea that maybe this is a 1, 2, 3. And if this is a 1, 2, 3, we should expect price generally to pull back to the 38.2 or the 50%, right? So your 38.2 gets you to this support level here, around that 4,086 area. And it's right in this stuff right here, right in this cluster here, which becomes this cluster right here. So I'm looking for, do we get a pullback generally to this area and then a rally up? Again, same idea with the pivots here. We moved in sideways between the pivot of the R1 and continued to rally above the R1. That's usually a pretty significantly bullish sign. So now we're going to look for a pullback to the previous area of support and then a breakout higher. And that'll give us 5 up. And all of a sudden, I'm looking at this as being like a wave 4 here and rallying up, in a wave 5 or, wave 1 of 5 heading up there. Does that make sense, guys? Indeed, technically, I see the things in the same way, but I can't find a fundamental narrative for a bullish scenario. Again, I wouldn't really worry about fundamentals so much. I may have mentioned this a few weeks ago on one of the shows I did here. The problem with fundamentals is you have to, first of all, understand how to do them. And then second of all, you have to have experience where you're right more times than you're wrong. Those two things take usually a lot more training, a lot more education, and a lot more time. So a lot of times new traders will come in. I'm not sure how experienced you are. I'm just saying in general, new traders will come in and they'll try to do fundamentals and they'll get it wrong a lot. And they'll get it wrong because they don't have those two things, which is why I always teach people. I talk about fundamentals and stuff a lot because I've been doing this a long time, right? I can see these narratives, right? Just look at my track record for interest rates since 2018, doing it live here, right? Been right every time, right? In spite of what the Fed said. But I teach people to do chart analysis because it's a lot easier to learn, patterns and what you expect and the rules and everything here than it is to go through the whole fundamental, reading balance sheets, reading, SEC disclosures, and then in especially trying to understand global finance and global macroeconomics. It's such a difficult thing because there's so many moving parts. And most people that learn these things, they go through learning through school. So they go through things like econometrics, which is a bunch of BS. It's just the way the government tries to use math to prove economics. And usually what they end up doing is they use that to just support whatever they're trying to say in terms of things that they want to do, right? Spending that they want to do, taxing that they want to do, stuff like that. I'm not a big fan of econometrics at all. I hate it. Because it just distorts so much. But so that said, a fundamental reason, again, talking about what we were talking about, if the Fed is always reactionary, right? So if prices are done rising in general, right? So if your CPI number is starting to pull back now, which we saw that, we expected a big pullback last month and we got an even bigger pullback, right? So if that's signaling, hey, that's kind of done, we look at the housing market. The housing market topped out back when I said it was going to top out back there at the beginning, like Q2 of this year or whatever, right? And it's continued to drop as we were talking about. Oil looks to be topped out. Oil is coming down, right? And of course, where's the demand for oil if everything's kind of pulling back? People are spending less money, right? Less traveling, less plastics, right? So much oil goes into making plastics and other things, right? So if you need a fundamental reason, I think there you go, right? Everybody's hurting from the increase in prices and whatnot, and so they're not spending. So that causes things to go down, right? Businesses are, rescinding offers that haven't been accepted. They're cutting the workforce, all these kind of things going on. So I think there you can have, if you need a narrative, I think there you can have one. But at the end of the day, everybody's drinking off the USD, okay? That's how interrelated everything is globally. So really, in the broadest and most general sense, the dollar dictates how the rest of the world works. Now, again, there isn't going to be any, the dollar does this, so something else definitely does this immediately. But we're talking about, if you think of the world as this huge ocean, and you think of these waves, right? And then you have smaller waves and little ripples and whatever, right? So the dollar, what's going on with the dollar, not necessarily the dollar price, but what's going on with the dollar with liquidity and stuff like that, those are those big waves. And they cause smaller waves, which cause smaller waves, which cause ripples, which then affect, throughout the entire world. And it's because, the dollars that reserve currency, right? So that's what's going to happen. So I think if you need a narrative, you have to go off dollar liquidity. I think is probably the most key point. And then, but that again, then you have to go into understanding what the euro market is, what the euro dollar is. Say euro market, the euro dollar is, right? And how that affects flows and what's going on with it. And that's a lot more than most people even want to do. Again, economics, dismal science, right? So yeah. Yeah. Well, we'll see what goes on here. Again, I'm not I talk about more fundamental stuff, but in general, I think if you're a trader, I think staying away from that and just kind of learning how to trade the charts is going to make you a lot more successful. It's going to give you a lot more opportunity to make money, a lot less opportunity to lose it. You got to learn to do it correctly, of course, but learning fundamentals, not that you can't, it just usually takes a lot longer. There's a lot more moving parts and a lot bigger understanding. And a lot of times that understanding only comes with experience, living through it. My views on how everything works in the world have changed over the last 25 years that I've been trading. As I've researched more and more, how everything works and goes on and, my education and everything. So, yeah. Blaze said OPEC doubled to bump up the supply of oil production by 100,000 barrels a day in September. Yeah, and so especially if you're bumping it up and, there's less demand because, people are spending less money, doing less traveling, stuff like that, which we know they are in general, right? It is what it is. As far as Hank's thing, it says in the EU, they are increasing wages and hiring is still a problem. We still have hiring issues over here as well, but that is its own thing, right? So yes, overall, you're gonna see some things happen with that based on what's going on with the overall economy and all that, but it still has its own boundaries and its own things that are happening within that. So, again, it's the way you think about it is, why do markets extend so well, so strongly into the very end? So if you think in terms of Elliott wave, the larger the cycle, the more enthusiasm, the more exuberance you can expect at the top, right? Because you're getting fifths of fifths of fifths of fifths, right? So people get overly exuberant at the tops, right? Even though the economy and everything may be turning down and going down, you ignore that. You continue being exuberant, right? Same idea, generally with when you think of like hiring and whatnot. Overall, what's going on with the economy is going to dictate overall what happens. But locally, at least as that transition is happening, you may see something a little bit different at a time within that particular subset, right? Which would be the hiring market right there, right? You got people that are going to hold out and think they deserve better, and other people that aren't going to be willing to do more, and other people that maybe still are doing good off their stocks or their crypto, and so they don't need to go back. But as if it's a recession, then as that hits in more and more, you'll see those people, they're going to, use up their last cents and be done, right? Here in the U.S., we know that savings are depleted now and credit card use is up. This is in stark contrast to what we saw a few months out after the pandemic began. Remember, I showed you that savings were well over 33%, which is pretty much the highest they've ever been, right? And we saw that all that debt was getting paid down, right? So here we are at the opposite side of that now, just over 2 years later, right? So yeah. So anyway, okay, Hank. Well, as you like to say, we can agree to disagree, right? Let me see here. So let me pull up some other things, some other charts here real quick. Let's see here. Oil. Where are we at with oil? So we're getting a little bit of a bounce here. Right now, off the top up here, we're still working off this wave 2 here coming down, right? Again, could potentially be a wave 1 down as some sort of diagonal, and we can get a push up higher. For right now, as long as wave 2 holds as resistance up here, we're going to continue, expect it to go lower there, right? Let me see here. Yeah, so if we're looking at this, I mean, I think it's possible we could be looking at maybe like a 1, 2, 3, 4, 5. So that gets us 1, A, B, and then we're looking for 5 up for C. So we're just right here at the 4-hour pivot. We could push up a bit higher. So I could see this as wave 1 and the wave 2 of a flat, of subwaves of wave 3. But again, if we break out above wave 2, then we start looking, okay, maybe this is actually a 1 down here. I've got this as a series of 1-2s, which I generally don't like to do because it seems much more, usually if you're getting more than a 1-2, 1-2, it's a better count for it. In this case, could be 1-2. Could potentially even be 3, 4, 5 or 3, 4, 5 here. So, again, in that case, we would expect this to rally back up here a bit further into next week. I could see that doing it, especially if the dollar's pulling back next week. I could definitely see this kind of rallying up. Sure. Let me see here. Gold. Oops. That's what we got here. Let's see. All right. So here we go. Looking at potentially gold being done down here. We had this rally up, got rejected. Tweezer tops up there, coming back down to the daily pivot. May or may not be complete on this 5 down we're looking at here. Let me kind of zoom out to the daily here. So this is our daily kind of picture, what we're looking at here. Again, could be what I'm looking at here generally is this is 5 down, 1, 2, 3, 4, 5. Looks pretty clear, right? And so this is an A, this is a B, and then I'm looking for a C up higher here. Probably around this kind of 1880 kind of area. 1860, 1880. I think it's a pretty good target. Maybe get up into this wick here around 1900. But anyway, that looks to me like 5 down, 3 up. Like we're getting 3 up. So that's what I'm going to be looking for. And we're finding support right here at the pivot. We do have this gap up here. Right here between the 27th of July and the 28th of July. So again, we could even see that maybe fill in, but I don't think so. I think, again, if this is ABC, then we'll fill that in on the way down. If we look at silver, let's see here. So silver, again, kind of looking at potentially being done here. We've got tweezer bottoms potentially at the bottom here around the 65% retracement. Just above that daily S1 pivot, though. It's not the daily pivot, right? But here we go off here. And so in this case, with the gold, we were looking at a 1, 2, and then a 1, 2, okay? Here we've got a 1, 2, and then a 1, 2 here. Again, same idea. 1, 2, 3, 4, 5 down. A, B, and then we'll look for a C on the pull up here. To head up here, maybe around 22.36, maybe somewhere right on that's a pretty good target. So again, looking for that to rally back up. So if silver and gold are going to rally back up, that would suggest that the dollar should be pulling back, right? Tend to work opposite most of the time. So, again, looking at the idea that maybe the dollar will pull back next week, which If it does, again, there's your reprieve for Bitcoin to maybe rally up higher and make a new high, and scare the bears a bit, make them double down on what, on their thoughts it's going lower kind of idea, right? So, yeah. So that's what we would kind of be looking there. I think that about does it there, right? I can pull up natural gas here real quick. Natural gas looking kind of iffy. Here we go. All right, let's see here. So now we've got what looks to be 1, 2, 3, 4, 5. So it looks like a leading diagonal down. We came within within a few hairs of the wave 5 up here. Potentially though a double top. So what we're going to see is, do we break down lower or do we break out above? If we're breaking out above this swing high here at $9.667, it should, I think there's little reason to believe that it won't break out above the swing high here. We'll have to go back and figure out what the count may be. Again, at that point, this would probably be 3. This would be 4, and then we're looking for 5 up. But again, for right now, this does look like A, B, 1, 2, 3, 4, 5 is leading diagonal, right? So if we get a breakdown here, well, again, then we're looking 1, 2, potentially 3 coming down, right? So that's what we're going to look for. We want to see a breakdown below 8.403 here. That'll be the first clue that wave 2 may be complete. But with this count, we'd need a breakdown below 7.532 to kind of add confidence to the count and say, hey, yeah, wave 3 is likely in progress lower there. Until then, until we get this breakdown here at least, potentially breaking out higher there. So we'll have to watch on that. I've got a target up here at about $10 and 10.214. So that would be my initial target looking off there, but we'll probably, extend higher if this is only wave 4 here and we're headed up higher. So we'll see what happens with it. We're just looking for a good breakdown that kind of continues lower off that. You can see here the daily, we're basically topped out and overbought. RSI continues to make lower highs here, right? As we've made higher highs until this one. So now we got a lower high in RSI, a lower high here. Daily candles. look at that. It's all wicks, basically, right? So you've got all this supply in here, and we pushed up into it, and then we've got wicks, small candle spread there. Doji, wick at the bottom. We'll see how this ends today. But a lot of wicks in here, a lot of back and forth. Same thing we kind of saw there on the pullback. So we'll see if we don't get a push higher there. That R1 pivot would probably be a good target up there. That's right around my target. That's pretty much the same area. Yeah, it's the R1 pivot. So yeah, that would be the first place I'd look on a breakout higher. And then we just have to figure out, okay, well, what's kind of going on here? Again, the idea that maybe this is a flat here, right? Well, as we have it as a 4 here. And then this is 1, 2, and maybe we'll get 3, 4, 5 heading up for 5. Rather than just this slightly higher high here as a 5. Okay? Big picture on nat gas is this right here. So, breaking out here above the pivot, pull back, pivot support, break out through the R1 all the way up almost to the R3, pull back to the R1, previous area of resistance is support. Tweezer bottom's almost there, rally up. And see, again, you've got this ugly reversal. What people would tell you is a reversal candle. And what happened? It just pulled back 2 weeks, right? And barely any lower in the second week. Rally back up here. We do have room on the Stoke RSI to head up higher. But yeah, looking at this, I could definitely see it rally up here to the R5, 13,541. Again, I've got this starting off here, again as 1, 2, 3, 4, and then, working on 5 up there, right? So 3, 4. So heading up here, 1, 2, 3, 4, 5 kind of thing, or 1, 2, 3, 4, 5. And I think you might get more of an ending diagonal here, maybe, to finish it up in this area. If it does break out higher. But again, could potentially be double top right here. Maybe even get a little bit more of a double top locally as well. So we'll just have to see if it does break out. We're really just kind of hit, notice we're just kind of hitting this area right here. You see this little area right here is your supply here. Resistance a little bit lower. Then you've got this weekly down up right here and sideways. It's all in the same area. Rejection right there. That's the same area where we are right here fighting to get above. So again, rallying up higher gets us in this other structure here with the previous swing high up there. And that would make sense. It would suck for people needing, natural gas and whatever, but I think, we'd be closer than not to a top if we're not there already. And then we'd have a good pullback after that. Nice bit of reprieve after that. So yeah. Anyway, guys, hey, listen, that's it. So, man, we'll see if we can get it higher up. Not looking overly convincing at the moment. Let me see here. Again, it looks like ABC here. If we're dropping below this swing low at 21,321 and let me see here. 21,278. If we're dropping below that, then we should probably make a new low. Again, you got the 61.8 here around 21,094.5, 65 at 2090. And then, of course, you've got the 70.5 retracement here at the S3 pivot on the 1 hour right around 25.71. So we'll see, if we can watch something like that. If you keep on breaking down, obviously we've got the daily S1 pivot down here at around 19,810 or so. So we'll watch that. But especially if we can hold this support here and we break out impulsively above the descending channel EQ here, we look for a target of the channel resistance. Impulsive breakout above that should indicate that the bottom's in. We'll get confirmation on a breakout above wave B up here. And then again, we'll look higher up into the 30,000s there as we talked about earlier. All right. So there you go, guys. There's my thoughts. As always, remember, the only thing you control in the market is how much you lose. So please keep working on your risk management. You can join us at howtotradetowin.com. We'd love to have you there. Great people. But if not, we'll be back next Tuesday, 11 a.m. Central Standard Time, here on Twitch, YouTube, and there on Twitter. And we'll see how the weekend went. I think there's a good possibility with how overextended everything got that we could be leading into a rally this weekend. Would that just be a bounce or a new high? We'll see. But I think there's a good chance we could go higher. We just need to kind of, make it through those levels I talked about to add confidence as it does continue to advance there, right? All right, guys. There you go. You all trade safe. If you're in Discord, of course, I'll see you guys there in a bit. Otherwise, hopefully we'll see y'all, or if not, next Tuesday. Take care.